Mullen Automotive, a company that divides opinion. There is no shortage of people that will tell you that this is the next Tesla, while others will say that this is a pump and dump scheme that will drain investors' money. But the wheels have well and truly come off Mullen this week, going from a high of 61 cents last week to a low of 26 cents this week. This is exactly what I said would happen last week, and it will not stop here. In fact, since I first talked about Mullen stock all the way back in March, everything that I said would happen has happened. If you don't know about Mullen Automotive, it's ticker symbol MULN on NASDAQ. Since going public in November 2021, this stock has been lied about on social media more than any other stock on the market. The stock is over 98% below its high point last November, so what is going on at Mullen? The strikingly different tour is happening, so why is MULN's share price dropping? What's up investors, and welcome back to the channel and back to another Mullen Automotive video. In this video I will look at each of these points and explain why Mullen Automotive stock keeps dropping and why most of social media is lying when they say anything different. So if you enjoy my MULN videos and want me to keep creating regular updates, can I ask you to smash the like button? By liking the video and dropping a comment, you are letting me know that you want to see more of this type of Mullen stock content. I'm aiming to get 500 likes on this video. It literally costs you nothing, so help me out by smashing the like. Honest analysis of stocks tends to get a lot of dislikes. Real due diligence gets a lot of dislikes. Don't let them hide this video with their dislikes. Share this video, smash the like button and drop a comment to make sure as many people as possible know the truth. Help the community, do your part, save the next guy from losing money. Subscribe to the channel if you're new and hit the bell notification. Now, let's get into it with the very latest news from Mullen Automotive. Did Mullen Automotive just score its second GM veteran? The company has likely hired Paul Louver as its new Director of Product Marketing and Planning, although this is not fully confirmed. Now, I spoke a few weeks ago about how Mullen was hiring John Swegman. How I felt that appointment seemed very odd for a number of reasons. Actually, that was a very good video where I talked about a lot of different points about Mullen and why I felt that the stock would soon drop like a rock. The stock was at 50 cents at the time and has been dropping ever since. Check out the videos in the links in the description below. Now, the appointment of Paul Louver is even more odd. This is a guy who was at General Motors for 32 years and then retired a couple of months ago, but he has now come out of retirement to take up a role at Mullen Automotive. To me, this just looks like another attempt to pump the stock more than anything else. But the news from the day before is what really got me thinking about Mullen and just why everyone should beware this stock. This news was actually being pumped around social media as if it was a good thing. As I dug deeper, the more and more I found, so keep watching your way through this video. This will shock you beyond belief if you have invested in Mullen stock. Mullen Automotive announces elimination of approximately $13 million in debt with less than $10 million of debt remaining. The conversion will save the company more than $3.5 million in interest expense and eliminate the debt service obligations. So first of all, look at how amazingly bad this debt was in the first place. $3.5 million of interest on a debt of only $13 million. That's nuts. That is nearly 30% interest on this debt, which is an insanely high interest level. Who the hell would even sign up to this kind of a deal and why? But it gets far worse than that. So this $13 million reduction of debt has reduced the overall indebtedness of more than $30 million last year to the current estimate of less than $10 million. So Mullen continues to strengthen its financial balance sheet with the recent elimination of approximately $13 million, which was associated with the debt obligation to Ecelsa Holdings. It is anticipated that this debt conversion will save the company more than $3.5 million. The important words here are debt conversion. Mullen have not paid off this debt using company cash. But if you think about this logically, Mullen have diluted shareholders constantly throughout 2022. Back in June, the company announced the strongest balance sheet in the company's history, with $61 million in cash. This cash was brought into the company through dilution of shareholders. There's no question about that. Even the biggest Mullen bulls can admit to this dilution, which I will look at in just a moment. But they raised this cash by issuing shares, diluting shareholders, and when it comes to paying their debts, instead of using the cash, they dump on shareholders by diluting shareholders even more. And the dilution of Mullen stock is on a scale that I have never seen before from any NASDAQ listed company, except for just one, which I will look at in a moment. First, let's look at this. On December 16th, 2021, CEO David Michery owned 22.9 million shares, which amounted to 64.7% of the whole company's shares. So the total amount of shares for the entire company was about 33 million. By March, Terren Piezer owned 29.3 million shares, which now amounted to 9.9% of the company. So in just 3 months, the outstanding shares was up to a total of 300 million shares. But then look at the most recent filing from Robert Bollinger. 51 million shares now amounts to only 6.8% of the company. So now the total shares is up to 750 million shares. This is insane. Then there is the fact that David Michery keeps getting millions of shares for free anyways. Last month, Mullen CEO got 46 million shares for nothing. The month prior to that, he got 9.6 million shares for nothing. And this will continue because of performance-based compensation agreements. As it says here, for example, if Mullen enters into an agreement with a manufacturer or provider of equipment, accessory, feature or other product, the company will issue Mr. Michery a number of shares of common stock equal to 5% of the company's then current total issued and outstanding shares of common stock. So this is just one stock performance package. There was a whole bunch of different bonuses that will each give management more and more shares for free. So when people say to me, why would they bother acquiring Electric Last Mile, or why would they enter into a deal with Bollinger or Watergen? Why would they do these deals if the company is a joke? Well, here's your answer. Mullen Automotive enter into these deals in order to activate bonuses. And what do you think happens then? Well, in my opinion, it's pretty obvious. But we can look at something to back it up. So look here for anyone who is still naive enough to ignore the facts. David Michery is awarded 45 million shares for free and then sells 17 million shares at market value, which is about 40 cents at the time. So that is a payday of about $7 or $8 million for doing nothing. Now, as I pointed out a moment ago, the only other Nasdaq stock that I can think of that has done something similar to all of this is another retail favorite from 2020. And I do wonder if anyone who has invested in Mullen remembers OnTrack or has even heard of OnTrack. Ticker symbol OTRK. OnTrack is a stock that got pumped up to over $100 a share and then dumped and kept on dumping on shareholders until the stock dropped to what it is now, which is just 37 cents. But look here. Look who the main guy at OnTrack is. Terren Piezer. The very same Terren Piezer that has a very large holding of Mullen Automotive, but it gets far better than this. This guy has form. This is a post on Reddit from last year on the OnTrack subreddit. One of the comments is for someone who has done extensive research, and Mr. Piezer's name comes up a few times. Looking at point number 15 here, Terren Piezer was part of the Michael Milken scandal of the 1980s, which fleeced billions of dollars from investors. Facing up to 40 years in prison, Piezer testified against Milken in exchange for immunity. The Ponzi scheme and resulting fallout inspired the book Den of Thieves. Or point 22. He used to be president of a shoe company called Millfield Trading Company. The public company was under investigation for fraud and tax evasion. One day prior to an indictment being announced, Piezer sold 90% of his shares in the company. Piezer was sued, but eventually was able to get the charges dismissed. Investors, however, lost everything. This is a man who calls himself the real Wolf of Wall Street. Now I urge you, take a look at this. Pause the video and read through each of these points. What you will see is incredible. Mullen is set to be just another name on a very long list. And David Michery's list of former companies is quite terrible too, which is something I'll look at in another video. If you've watched this far into the video and you enjoy this content and appreciate the level of time and effort that goes into this research, then please smash the like button. By liking the video and dropping a comment, you are letting me know that you want to see more of this type of content. More of this type of actual due diligence. So smash that like button and don't let this video get hidden by those that want to hide the truth by hitting dislike. I promised to do a video about Mullen Automotive CEO David Michery too, and more of an explanation about the company's terrible financing deals. If this is something you want to see, subscribe to the channel and comment down below that you want to see an update Mullen video where I discuss this. I'm aiming for 500 likes on this video, so as soon as I hit 500 likes and 100 comments, I will make the video answering the question, is Mullen going to keep dropping? Or is Mullen stock worth buying? Now, one of the things I really wanted to see this month was the company's next earnings report, so that I could look at the full dilutive effects of the recent Bollinger and electric last mile deals. However, it looks as though the next report will not be a 10Q quarterly report, but instead a 10K full year report. So the filing deadlines for the 10K vary based on the size of a company. Companies with a float between 75 million and 700 million have 75 days to make the filing. The year end for Mullen Stock is September 30th, so the expected filing will be in December. Looking at the 10Q filing dates, I had expected the next report to be between the 12th and 16th of the month, which would fit in with the allowed time frame, but last year's 10K was not filed until December 29th. The good thing here is that the report will include full details from the Bollinger deal. This is where I expect to see a massive goodwill figure being added to the accounts in relation to this. As I said before, Mullen paid $148.2 million for a 60% interest in Bollinger Motors. This values the company at around $250 million, which I think is nowhere near a fair value, and this should be exposed in the full year financial statements. This was, after all, the deal that began the current round of Mullen hype, after it was announced at the same time as Mullen were hit with the notice of delisting or failure to satisfy a continued listing rule of standard. This came about because Mullen stock had closed below $1 per share for 30 consecutive business days, and as a result, the company is not in compliance with Nasdaq listing rule 5550. The company has 180 calendar days until March 6th to regain compliance with the minimum bid requirement. To regain compliance, the share price must be at least $1 per share for a minimum of 10 consecutive business days during the 180-day period. Now, in my opinion, I feel that Mullen were banking on the Bollinger deal, the electric last mile deal, and the strikingly different tour to push the share price up above $1 again, which would have pushed this delisting fear further down the road. In fact, if all of this had been done in the bull markets of 2020 or even 2021, the share price would probably have gone far higher. But today the stock market is no longer full of eternal optimism. Too many people have been burnt over the past 2 years, and there is a real element now of realism in the market. And for this reason, I fully expect to see a reverse split happen at Mullen Automotive, but no time soon. As it says here, if the company does not regain compliance with the bid price requirement by March 6th, the company may be eligible for an additional 180-day compliance period as long as it satisfies the criteria and the company provides written notice to Nasdaq of its intention to cure the deficiency during the second compliance period by effecting a reverse stock split if necessary. So I expect a reverse split to happen, just not until mid-2023 at least. In my opinion, there is no way that management will allow this to drop onto the OTC if investors are still willing to pump money into this based on hype. But that is just my opinion. Remember that I am not a financial advisor and this is not financial advice. As I said at the start of this video, check out the videos in the links below to find even more Mullen Automotive information. This could save you from losing a lot of money. Check out the rest of my channel too and follow me on Twitter. See you in the next update video.